Everybody was kung fu fighting. All right, 12 o'clock. Let's just wait another 30 seconds or so here. Let some people pile in. All right, let's do it. So it is 12 o'clock Eastern Time on May 18th, and we are set to do the Prop Trader Market Update hosted by yours truly, Derrick Smith. Quick disclosure here. I'm an associate member of T3 Trading Group, which is an SEC registered broker, dealer, and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, these are the positions I have currently, long across the board. We'll be talking about markets here in a minute. About me, I am senior trader and registered principal at T3 Trading Group. I've been here for over a decade at this point. I've mentored well over 100 professional traders for the company, currently managing a group well in excess of 50. Spare time, I'm big into martial arts, big into skiing. Ski season is ending out here in Idaho. I'm a big traveler, by the way. For you guys who, well, it ended already. For you guys who've been following me regularly every Tuesday, you've been hearing back in February about the chest-deep powder I was skiing, and now here I am. We're getting into hiking season, mountain biking season. I'm looking out the window at the horses in the back. What a life. But I'm also going to be driving back to New York to complete the road trip in June. Here's my email address. We're going to be talking about markets today. We're going to be talking about T3. We're going to be talking about how you can get involved with T3. So if you have any questions about any of this, here's my email address. It'll come up again towards the end. Feel free to reach out. All right, let's go to the charts. Okay, so just happen to have a 5 minute of the Qs up as of right now. So it's a 5 minute chart showing yesterday and today. Qs are up about 0.25%, but we always got to start big picture here. So let's start big picture with our S&P, with our SPYs. So market took a big dip here in mid-May last week. It actually made for some pretty exciting price action. We spoke about this 2 Tuesdays ago, about kind of being set up for the pullback in the market based on the deviation that we had seen in the VIX. The VIX starting to move higher with the market still moving higher. And then the big signal was all the way back here on April 29th when the market had a false breakout which failed breakout, if you will, and that was in conjunction with these earnings reports from Apple, Amazon, Microsoft that just had stellar numbers, incredible numbers, but led to a sell-off in the marketplace, a sell-off for those stocks, and eventually it brought the whole market down. You can really see the relative weakness in the NASDAQ, right? So that was pretty much the peak in the NASDAQ before the sell-off. We broke that first major level of support, which was around 334 to 335, via a breakaway gap to the downside. This was a major shorting signal here on this day. This trading session here, where we actually peaked back above that previous level of support, was a little bit of a head fake for sure, and I honestly think that this was the most difficult trading session that we had to experience over the course of the last couple of weeks, because outside of that head fake, it was pretty straightforward. A little bit of a head fake, followed by continued downside price action, a huge gap down here that was bought up on May 11th, followed by even new lows on May 12th. So we had a few pretty big down days in a row, some interesting price action, an increase in volatility. Generally, these are all the things that we like. And again, the signal was there for it. Now, is this going to lead to a further breakdown? Well, let's take a look at our indices and see. At this point, the Qs have had a pretty big bounce back, and I actually think that the price action... So, on Friday, let me just take a half step back. So this is Friday's daily candle. On Friday, we recognized that the SPYs had gapped up to basically their equilibrium point after that sell-off. So normally you would want to sell into this gap up. And same thing with the NASDAQ. The NASDAQ didn't quite get all the way up there, but usually when you have a short-term downtrend and you get a big gap up, usually that is something that you want to sell into. We recognize that Friday was a little bit different because Gamma was negative, or Gamma's been negative for the last couple of weeks. So, Gamma is just one of these institutional measurements that we look at, and when Gamma is positive, it generally means that your market ranges are going to be tighter. When Gamma is negative, it means the opposite. Your market ranges are going to be wider. So Gamma being negative implies that down moves are going to be more robust to the downside, and up moves, those bounce backs, are also going to be the same thing. So instead of actually selling into this gap up, we ended up buying, calling out a buy signal at about 9:50 a.m. on Friday, when the Qs, we could just look at small time frame technicals. So this is Thursday. This is the Friday that I'm referencing. So Friday we had this big gap up in the NASDAQ that was followed by 20 minutes of consolidation. So this is actually technically a bull flag, with the flag pole being the gap itself. And then, as is typical of bull flag patterns, once the ADMA catches up to the base of the flag is usually when you get continuation. So at about 9:50 that day, I was calling out to the team on my virtual trading floor, the pro desk, that it was time to buy, and we might be able to see some follow-through. The degree of follow-through is pretty impressive. Going back to the daily chart here, you can see that brought the Qs all the way back into this equilibrium area. I consider technical equilibrium to be the space between the 8 and 21 EMA, so it got us back there. And then the question for yesterday, for Monday, was if the market could maintain those gains from Thursday, Friday of last week. Or was it just this negative Gamma squeezing shorts and pushing the market further on Friday than it would have normally? In which case, if that was true, then you would expect bears to actually come back into control early this week, yesterday or today, and bring us back down and kind of have this established as a lower high for the market, and the short-term downtrend that we're particularly seeing in the Qs could continue. And it's not what happened. The SPYs yesterday gave a boring inside day. The IWM yesterday showed actual great relative strength. The Russell 2000, your small caps and your mid caps, showed great relative strength, but also had an inside day closing at its highs. And the NASDAQ did not have an inside day because it broke Friday's low, but it closed well within the range. So for all intents and purposes, all three of our indices yesterday did a really good job kind of digesting those gains, and they're still doing the same here today. They're still holding up. So the market today has been a little bit out of play, but a lot of the stocks that we've been looking at and a lot of the stocks that we've been focusing on have not been. So I have a list of stocks that I've been paying attention to on kind of a day-to-day basis. where these are the stocks where here on the Tuesday webinar, I was telling you all back in December, January, last year into this year, that as far as I was concerned, these stocks are all in bubbles. And at this point, we're at a spot where those bubbles have really burst. Let's scroll back and let's look at some names. For lack of a better term, we kind of call these the speculative high multiple names. You might call these the ARK type stocks. ARK being in some, but not all of them. Here's just the ARK ETF, ARKK. You can see that this thing has just gotten really beaten up, especially when you compare it to what the SPYs of or even the NASDAQ, right? Even the NASDAQ, which has had a little bit of a pull-in. I mean, the NASDAQ is just $15 away from its all-time highs, whereas ARK here has had a pullback from, $160 to $97 or so as of last week. So just kind of a massive pullback. But the names kind of in there, the sectors that are kind of in there, Tilray in the marijuana space. This was one of the bubble stocks, right? It went from, a low of like $6 in November, December to a high of, $67 by February. This was one of the bubble stocks. Now what has it done? It's gone from 67 down to 1350. 3D printing names, right? Triple D. Triple D went from, pricing around, let's just find a uniform spot here, the end of November, trading at around $8.50. That's actually after a big move, going from $8.50 to also, by February being at $56. From that bubble top, the bubble burst, it went all the way down to 17. There's your 3D printing names. You can put NNDM in that kind of category as well. INSG was, kind of one of the big short squeeze names for a period of time. This stock at the end of November was a, $9 or so name. It went to 22, so 250% return or whatever, and then got hit with a bad earnings report, came all the way back down to $7. Skills, a big Cathy stock, right? Big ARK name. Skills here at the end of November was $13 or so, went to 46, went to $12.50 on the bubble bursting. Sumo, one that I have a position in currently. Sumo back here in November was like $19, puts in a high of 46, comes back down to 16. Plug and fuel cell, right? Plug here at the end of November. I mean, you guys get the idea. I don't got to go through all these, but Plug, November was at $15 and went all the way to $75. It pulled all the way back, had some accounting scandals along the way, down to $18. And there's just, so many more. You can look at Juma, you can look at MSTR, you could look at a lot of these electric car names. NIO, which is a company I really like, has pulled back from, 60 to 30. I think I have a position now in that. XPEV, right? CCIV. Obviously, we know what happened with Nikola. Some of the solar names like Sunrun, right? Sunrun going from, I guess, this move here really started back in the summertime. In July, it was at $19. In November, it was at $54. And then, by early January, is at $100. This thing is pulled back 60%, pulled back to $40. So we know what's happened to these stocks, right? They've just gotten absolutely destroyed. But where are they getting destroyed from? They're getting destroyed from what we characterized as kind of massive upside bubbles. So it's not necessarily unhealthy to pull these things down. They've been in big downtrends here now for multiple months, despite the fact that the S&P has kind of continued to notch highs. So this is just a category of stocks. And last week, we started to recognize a change in them. Jumai just kind of tends to be my go-to. Maybe this chart's a little bit distorted because it had earnings here last week. But we can look at basically all of them. They really started to show us a change on May 11th last week. And now, if you include today, and obviously today's trading session is not finished yet, these stocks have actually shown relative strength in the market, have held up really well for 5 out of their last 6 trading sessions. Normally, I don't really like trading counter trend. I'm not really a counter trend trader. I tell everyone on my team all the time, as a general rule, easy money is with trend. So, and obviously the market's generally been trending higher, so we want to be long. We've been focusing on being long sectors like the XLE for obvious reasons. Going back to November when we recognized the breakout of the downtrend in the XLE, we've been looking at XLE for relative strength. We've been looking at XLF for relative strength. We've been looking at material names like FCX, X, CLF for areas of relative strength. And now, over the course of the last week, we've started to see relative strength actually come into those super beaten up stocks, which has put it back on our radar. For any of those names that we're talking about, again, I usually just tend to use Jumai as a proxy, but you can look at any of them. They started really showing relative strength. A couple of them also reported earnings last week on kind of this May 11th day, where Qs, were able to catch a bid back from negative territory to almost flat that day, whereas these stocks were down huge. So this was the day, and also one of the things that I had been telling the team was pay attention for the Kathy bashing, right? Kathy, I'm not here to judge any fund manager in any real way. I just am constantly paying attention to sentiment. When this thing was cruising and was at highs, in the beginning of 2021, she was viewed as like the holy grail of active investment, of active trading, and just obviously has had a big pullback here. A lot of stocks that she's involved in have gotten completely smoked. She just continues to double down and double down and double down in those names. And I was telling the team, I was like, one of the signals that we can look for, first of all, we want to see relative strength come in, but one of the signals that we can look for is if we really start seeing some Kathy bashing coming in. And it happened to be really on this May 11th day is when we started to kind of see it on Twitter. Just, a lot more Kathy haters kind of coming out of the woodwork, just as her ETF is down, 30-something%, and some of those stocks were down 60 to 75%. Whether you're looking at Skills or B-Fly or kind of whatever. And then, of course, just when we start seeing the Kathy bashing come in is when we start seeing really the first day of relative strength. So a lot of those names I just typed up, we could go through them again, showed great relative strength on that May 11th day last week. I forget if that's Tuesday or exactly which day it was. And then they followed up with inside days on the next day. So that is, let me just figure this out. So this is Friday, Thursday. So Tuesday of last week is when they started showing relative strength. And then they continued to show that relative strength by having an inside day on this Wednesday, 5/12. 5/12 is key. Look what the NASDAQ did on 5/12. Right? So, okay, great. Those high multiple speculative ARC names caught a bid, but so did the NASDAQ on the 11th. But look what happened to the NASDAQ on the 12th. The NASDAQ got destroyed. It was a complete rout. After having that strong close here on the 11th, we gapped down almost to the previous day's low, sold off, and even closed on lows. But even though the NASDAQ broke significantly May 11th's low, most of those names in my list didn't even retrace 50% of the strength from May 11th, right? So again, Jumai here, obviously this was an earnings one also, so it's affecting that a little bit. But this thing, nowhere near, even though I think it was down 7% that day, it pulled back nowhere near even 50%. Triple D obviously eventually reports earnings, so that becomes kind of one of your strong ones that's in there. Tilray actually broke lows, so I ended up kind of taking Tilray off of the list. What else? This AI was kind of on the list. AI had an inside day. Again, NASDAQ massively breaking lows on that day. Sorry, it's this day here. NASDAQ massively breaking lows. AI kind of on the list. Doesn't even come close. What about Skills? Skills, same thing. Not breaking the previous day's low. So that's where all the kind of relative strength kind of came in. Sunrun, also inside day. The only day out of the last 6 where these names didn't show relative strength, which made it a little bit tricky, and by the way, This is why counter trend trading is so hard. I so prefer to be with the trend. When you are getting involved in any of these stocks on a counter trend basis, there's just so many points of resistance and those moving averages and just so many things that you have to clear up that make them really difficult. And then, of course, on Thursday of last week, it was like, all right, they're not as strong again. Maybe it was just a 2-day phenomenon and the downtrend is kind of continuing. But then, bam, Friday, they're all kind of pushing against their moving averages again. The relative strength came back. Yesterday, for the most part, they all held up pretty well also. You can see yesterday here just for that Jumai. And then today, a lot of them gave breakout continuations. So just a lot of these names have been on the radar for breakout continuations. Now at this point, these have been on the radar since the relative strength came in. We were buying these things as a team heavily off the open on May 11th. And now they've given strong retracements. And the big question that we have now is, will this retracement become a reversal? I do think that there's maybe still some juice to squeeze here on the bounce backs in some of these stocks. Given the degree to which they've pulled back, I have no expectation of any of these names, maybe one or two of them will, getting back to their bubble high back in January or February. But it doesn't mean that we can't come in. I mean, this is such a strong move. I remember, as a team, we were calling out Jumai back through 19, I think, on this day. And now it's sitting here a handful of days later at 27.50. So really strong bounce backs there. This is honestly probably becoming a good spot to book a little bit of profit, but they gave continuation breakouts today for a lot of them. So we'll see if the relative strength there is able to continue. And no coincidence, it's at the same time as I'm starting to see some relative strength come back into the IWM, which we also want to pay attention to. So the IWM has really been our leader amongst the indices. Going back to its breakout here in November, you can just look at the slope of the trend in the IWM versus the slope of the trend in the SPYs. It's not nearly as steep versus the slope of the trend in the Qs since November, also not nearly as steep. IWM took over as the leader back here and then relinquished leadership at the end of March, beginning of April to the NASDAQ, which again, you can just see here, just IWM going sideways for pretty much all of April, whereas the NASDAQ really took kind of control and it ended up petering out with Apple's disappointing move on its phenomenal earnings report. SPYs, same thing. SPYs also kind of went with big tech. SPYs, it's funny, the SPYs seems to hold up no matter what takes leadership. It's like tech has leadership, the SPYs hold up really well. Tech stops having leadership, but XLE and XLF regains leadership, and SPYs hold up really well. That's been continuously impressive. But I want to see here now that the IWM has shown relative strength, now that those speculative names have shown relative strength, if we can actually see some continuation coming in there. But the biggest thing, guys, is risk management always. That is what I emphasize to my team on a day-to-day basis. Risk management is the key to success. So hopefully folks are actually coming in and buying where we were buying and taking advantage of the relative strength in this stock and a lot of those other ones after they pulled back 75% and not being bag holders for the 75% down move. The key to success in trading, one of several keys to success in trading, without a doubt, is game planning and risk management. And they really go hand in hand. What I tell my team all the time, what I'm doing as a professional trader, is probably 85% risk management and 15% reward maximization. But speaking of the reward maximization aspect of it, I know 2 Tuesdays ago, I think I brought up this BOEX as my highest conviction idea, with a little bit of a warning that the stock trades pretty thin for a $12, $13 stock, and we're finally starting to get the continuation on this thing. This BOEX is the SPAC that is set to become WeWork. It's kind of still my number one idea here. I'm looking for a much bigger move than this, but really given great continuation, and this was something I added on to this morning. So looking solid. I think that is all I've got for you guys this week. That's kind of the update, and I really do my best to try to do these weekly updates in such a way where anyone who's following along with them can learn on a week-to-week basis, pull out something where you can, draw out a lesson from how my team and I, a professional team of traders, view the market on a day-to-day basis. And if you want to become part of that professional team, if once a week is not enough for you, if you want to participate in my team's daily morning and afternoon meeting, the morning meeting where we're talking about what we're getting involved in, when, and why, and the afternoon meeting, which is primarily having an educational focus, where we're kind of going through what the market did that day, reviewing entry points, exit points, and game planning, and then doing a group Q&A. Become part of the team, which is what I'm going to talk about now. So if you want to become a professional trader at T3 Trading Group, here's some information. So T3 is one of the largest proprietary trading firms in the United States. We have hundreds of licensed professional accounts. We've got different physical offices. Our headquarters is in New York City. I'll be back there soon, but you don't need to be in any office. That's really what the pandemic has proven. I think that I've been at least as effective outside of the office as I was in the office. My team is still getting access to that great communication and everything on a day-to-day basis. So, become a remote trader with access to the pro desk virtual trading floor. You will have to become licensed to be a professional trader, as T3 Trading Group is a registered SEC broker-dealer and member of FINRA. Again, this means you have to become licensed with an SIE, Security Industry Essentials, and Series 57 examination, and you also have to pass a background check, which includes an FBI background check. You cannot be a convicted felon and join the company, as an example. Once the exams are passed, we have different software options available to you to trade with. We actually have 4 now for our equities. I got to get the spreadsheet here updated, so the PowerPoint here updated. So we've got Lightspeed, Sterling Trader Pro, Wolverine, and we've recently onboarded Realtic, also known as Ease. Personally, I've been using Lightspeed for over a decade. It's an excellent software. Sterling Trader Pro is a great software as well. Sterling Trader Pro is what we use for retail accounts at T3. Asset classes, we've got equities, options, futures. We've got options on futures as well. I'm an equities trader, and for T3 I primarily focus on equities and equity options. But if any of these interest you, reach out to me and I could put you in touch with the right people. For me personally, like I just mentioned, I'm specifically an equities trader. And look, there's nothing wrong with trading options. I've got options traders on my team. But whenever I speak to someone who wants to trade options, I always ask them why. If you're a directional trader, then I don't think trading options makes sense on a professional account, because we give you access to so much buying power, right? The number one reason why people in a retail account trade options is because of the natural leverage that's inherent to the product. But as a professional trader, we usually start by giving capital access at 20x your account for equity day trading and 8x your account for equity overnight positions. So my thought process has always been, why do I want to be in a product that is less liquid and subject to time decay just for capital access when I already have as much capital access as I could ever want? With that said, people who are professional options traders in the group, it's usually because they're focused on specific strategies that can't be done on the equity side, like trading spreads, or they're doing a lot of swing trading and they want to sell covered calls for cash flow and for risk management purposes. New traders should recognize that you're going to get access to a lot of training and development. And that's been key to my entire process as long as I've been managing traders here at T3. I started my own trading desk in 2013. So I've been doing that for about 8 years or so now. I do a daily morning meeting through the virtual trading floor at 9 a.m. I do an afternoon meeting at 10 after 4. Every afternoon meeting ends in a Q&A. There's an optional 1-month training program when you first get started. So you will be supported by T3 if you join T3. It really makes for a great offering, and that's all done for free. Capital contribution I mentioned earlier. So you will be required to fund your professional account. But what we will do on our end is we'll provide you capital access at 20x for intraday trading and 8x for overnight positions at a profit split to the trader, a monthly profit split. That's how that works. And if you're an experienced trader, you're also coming to the right spot. T3 caters to a lot of experienced traders here, and capital access is no problem for us. So if you want to be someone who puts $2 million into your account because you want access to $40 million, it's no problem. Whatever your approach is, we can probably be here to support you. So just a matter of reaching out. There's my email address again, doldensmith@t3trading.com. And then you get all this stuff for free if you get started now. This is what we're giving out for free right now. If you become a trader at T3, you get access to my virtual trading floor for free, where I'm doing my daily morning and afternoon meeting. You get access to my training program for free that's not even on here. You get access to Scott Redler's virtual trading floor for free. You get access to Scott Redler's newsletter for free. You get thousands of dollars worth of stuff for free. Why do we do that? It's very simple. If you're a trader with T3, we want you to succeed. If you succeed, if you're making money, T3 is making money, everyone's making money, and everyone's happy. We are thinking big picture on this stuff. We want people who are going to become professional traders and be with the company for a decade plus like I've been. And we're here to support you in every way we can along that process. So once again, here's my email address. I tend to be pretty busy, but I'm also a pretty nice guy. So don't be bashful. Reach out if you want to chat about stocks, joining T3. If you want to talk about, I don't know, maybe we need to do a trip down to South America this summer so we can get some skiing in. I'm probably going to be going to that little indoor spot in New Jersey that they built when I'm back in New York to get some skiing in the summer. It's going to be a big difference, skiing Jackson Hole, which has, I believe, the most continuous vert in the United States, to skiing 180 feet of vert in an indoor place in New Jersey. But if you want to chat about any of that, reach out. Here's my email address. With that said, I'm going to get back to my positions. It's been a great day for my own trading and for the team here. The market just doing, kind of exactly what we expected for some of these positions. So have a great rest of your day, everyone. Best of luck out there. Hope everyone learned a lot. And remember, what I always tell my team, manage your risk. It's the key to the business.